We've seen a lot of moves in this market, and we welcome in Darius Dale, founder and CEO of 42 Macro, to give us some ideas here. You know, we've seen a very resilient consumer. We've seen an incredible move for stocks for 2023. You wouldn't know that August, September, October were quite tough. How are you feeling between now and the end of the year?
Feeling now and the end of the year, it's actually quite bullish. I mean, we've done a tremendous amount of conditional seasonality research at 42 Macro, and that all leads to suggest the dip is likely to be bought throughout the summer, or sorry, throughout the winter months into late January.
So every time we pull back, I mean, there's some people who like to trade the VIX even, but on a dip, I just finished speaking with someone who thinks there's going to be a correction, but between now and the new year, we've already seen 5 weeks of gains. The Dow's probably going to be up for a 6 week. There could be opportunities. What would you say about the outlook for 2024?
Yeah, I'd say that the outlook for 2024 is, in my opinion, I think the most important thing investors should do is avoid pigeonholing themselves into either the soft landing camp, the hard landing camp, or the no landing camp. I think we all need to be a little bit more humble as investors about the future prospects for the economy, the future prospects for policy, and ultimately just be in position to respond to those changes in the economy and changes in the markets.
Are you worried about a recession or a deep recession or anything like that?
No, I think when you have proper risk management in place, as we do and as our clients do at 42 Macro, you don't have to, live in perpetual fear of things like recessions or any, boogeyman from the region, from the banking crisis, et cetera, et cetera. To us, it's all about understanding what the market regime we're in. We're currently in Goldilocks, and orienting our investment posture to account for that.
So at this point, when you try and give advice to folks what they should be doing, what do you tell them? Because obviously you do still have volatility, you do have rotation. We had tech doing so well, energy had been doing so well, but then energy was the loser of November, but market breadth has improved. What would you say to folks as an investment advice or strategy?
Yeah, this is an excellent time to be invested, fully invested as an investor. Whether you look at the technical signals for the markets or whether you look at the signals from the economy in terms of most recent data continuing to confirm the soft landing expectation that's embedded in the market consensus, the market should go higher. This is a market that wants to go higher and should go higher for fundamental reasons.
And what's this about the last mile? What are we talking about?
Oh, so this is the last mile discussion we had as with respect to our inflation projections. We understand that there's a tremendous amount of disinflation momentum in the pipeline currently. However, we do not believe that in the absence of a recession, the U.S. economy is likely to experience sustained 2 to 2.5% core PCE inflation.
Is it going to be hard to get back down? I mean, obviously the Fed and Jay Powell himself recognize that there is a lag effect. Yeah. And with all those rate hikes, more than 10, it takes time to, make its way through the economy. You don't foresee any more rate hikes, do you?
Oh, absolutely not. We've long thought the Fed was done hiking the policy rate. For us all, it's really about gaming the market expectation around when does the Fed start to cut. We think market expectations are a little bit ahead of themselves right now, but that does not necessarily mean the stock market or the bond market are in for a world of hurt as a function of that.
Yeah, I see January 12%, March 60%, May almost 88%, and so on. June. Basically there's almost 100% chance in the first half of the year. Yeah. Does that sound right to you?
No, it doesn't sound right to me, but again, as I mentioned earlier, it's not about the outcome that happens in financial markets or in the economy. It's about being positioned to take advantage of what happens in the markets. And so, as I mentioned earlier, the market can price in a soft landing, then after that it can start to price in a hard landing or a no landing. It's our job as investors to make and save money throughout that entire process, as opposed to trying to predict the outcome and positioning for that.
So you mentioned some names abroad. Is there opportunity abroad?
Yes, there's opportunity abroad, but in our opinion, the later in the business cycle you go, the more high quality, high grade you want to make your investment portfolio. And so generally speaking, that means investors allocating assets to companies in America, large cap companies in America that show that they can produce the cash flows necessary to support investor return expectations for next year.
Do you think about large cap growth, large cap value?
Large cap growth. I mean, large cap growth should outperform large cap value in a Goldilocks regime, which is how we're currently positioned.
And would you say that, I mean, you would do that now for 5 or 10 years out? I mean, would that be a long-term play?
No, not necessarily a long-term play. See, in our business line, in our line of work, we're about making sure we're making good short-term decisions all of the time, so that 5 to 10 years from now, when we look backwards, that we did have good long-term results. But it's not about putting on long-term positions.
Right. I mean, you could get caught.
Yeah.
Sounds a little chaotic because, it's hard. It's hard to know. So you're saying large cap growth now. What would change? And you'd say, I'm going to change from large cap growth, for example.
When our quantitative systems tell us we're no longer in Goldilocks. Right now, the systems are telling us that it's safe to continue to orient your portfolio in accordance with Goldilocks.
Tell us more about the quantitative systems. I mean, who decided these? Who made these? Wrote this?
Oh, so these are all systems that we've designed and developed at our firm, 42 Macro. I have a tremendous amount of experience on Global Wall Street designing systems like this specifically for large asset managers, and we sell those the output of those systems to retail investors as well. And
you're looking at all the metrics, I would imagine, right? What would be some of the metrics that it would take into account?
Well, specifically in terms of the market regime signaling process, we're looking at 42 market-based indicators, scoring them through the lens of our volatility-adjusted momentum signal to get an indication of which regime the markets are actually moving towards pricing in, and also to determine whether the markets have priced it in to too much of a degree, and we have not achieved that yet.
So, are you interested in the jobs report on Friday?
Yes and no. Yes and no.
I mean, I'm not even being facetious.
Here's why, Nicole.
It's because you're using, hence the name 42 Macro.
Yeah.
You're using those 42 points to evaluate the strategy. But at the same time, you want to see something on Friday, right?
Of course, and I think it's important to separate your research from your risk management.
Yeah.
So with respect to the jobs report, on the research side of things, what we're looking for are data that can sort of shake the market consensus away from soft landing. Right now, soft landing is the overwhelming market consensus.
Right.
If we get data that says a no landing is more probable, or data that says a hard landing is more probable, then this Goldilocks regime is at risk.
Right.
But in our opinion, based on the qualitative research we've done in our monthly macro scouting reports, we are not quite ready yet for the breakdown in the total employment picture.
So if it's a hard landing or moving to recession or something, how would you change that investment? You wouldn't do large cap growth.
No, well, you would obviously not want to be in equities.
What would you want to be in?
Yeah, you'd want to be in fixed income allocations, particularly investment grade fixed income allocations. Mortgage-backed securities are great assets there. The U.S. dollar would be a great asset there. Gold could potentially be a good asset there. It's really about the interplay between asset markets and the liquidity function in the markets.
Good advice. All right, Darius Dale, nice to see you. 42 Macro, thank you for joining us.